Hey everyone, this is Kirk here again at Option Alpha, and I wanted to go over a little bit of a weekend video, just kind of hit a bunch of the high notes again with regard to the indexes and the markets. It was a pretty impressive week overall. I really have to say, for the bulls, it was really strong. The markets rallied seemingly on any news. Didn't care if it was bad news or good news. The GDP revision higher for the fourth quarter obviously didn't or obviously helped out a lot, and that was a good sign for us in the markets. But I think that where we're at now is pretty critical, and it seems like we could be just starting a little bit of an uptrend from here. Now, I don't think that it's going to be the rate at which the uptrend is going to continue like this one did back in January, February. I don't think it's going to be that steep of a slope of line, but I think we're pretty much set for something similar along the lines of what this black line here that I've drawn here is. Now this is a look at the Russell, and I've also overlaid my MACD indicator and how I have it set up. So yours might be a little bit different, but mine's with two lines and a histogram, and that's just my preference. But I think what you want to take note here is that we just started to have a bullish cross down here, and this is where the black faster MACD line crosses over this red dotted line. That's a bullish cross on MACD. So I think that we could start to see a little bit more upside in the indexes. You can see that when the market actually topped out here at the end of February, we actually got a very clear bearish cross, again, where the black faster MACD line crosses below the slower red line here, just a very simple cross, and that was a bearish cross, and that was a pretty good signal for the market to continue lower. But I think that where we're going to go from here is that we could actually just move along the underside of this trend line here. So not necessarily break above this trend line and continue on, up into the 850s, but just kind of move along underneath this trend line and bouncing along. It's very normal for a stock and high probability that after a stock breaks out like it did, that it comes back up to this retracement. I've talked about that a couple times in videos last week. Now I'm going to go to the intraday look at the Russell here, and you can see that this is pretty much where we were last week. I'll just kind of cut it off. Is the market had broken out of this nice trend line, and something that I had talked about and posted about numerous times on the Russell is this wedge pattern that it was forming, and that it typically had or these patterns typically break out to the lower side or break out bearishly. And the measured move for that pattern is always the height of the initial start of the pattern. So really from 800 to 830, you could see it broke out about 810 and then actually bottomed out at about 780. So it was a pretty good measured move, almost exact as far as the measured move to a bottom. And then what I had said after this is I said that the market was going to, and here's my circle that I had drawn on the daily chart or on the intraday chart on the blog, is that I thought the market was going to come back up and retrace this breakout. It's very normal for the market to break out of a trend line, come back up and try to retest that line. And that basically just is the market saying, okay, we've broken out of this area, but we want to make 100% sure that that wasn't just a fluke. So we're going to come back up here and try to retest it. Now, on the intraday chart, it looks like it did cross above that area on the intraday chart for most of the day on Friday, but it actually sold off right after the morning all day and closed pretty much near the open, creating this shooting star pattern that we see everywhere. So that to me suggests that the market could be in for a little bit more downside next week. So probably coming back down and settling at least around the 815 area right here. And that's going to be a pretty good support target. And then we could start to bounce a little bit from there. If we look at the S&P is actually a little bit cleaner on its breakouts. Again, you can see the same wedge pattern happened here, a very good breakout move lower, and now has come back up and retraced most of the move. It hasn't completely come back up and hit this line here, but pretty close. You're never going to get it exact, but you can see numerous times before that it's hit this line and bounced off of this little trend line that we have here. So to me, this is a really good move. Again, I think the S&P could easily drop down to 1300 and then bounce off of there. That's where the next major intraday support level is. I wouldn't say major daily support, but you can see that that's where the market is likely to head. You can see it's already starting to head in that direction on Friday. So, and then from there, we'll just bounce a little bit higher and stay underneath this trend line. The other things I wanted to look at here, I wanted to take a look at the VIX real quick with everyone. The VIX is a heck of a story for the last couple weeks. You can see that once it had broken out here, we correctly, thought that it was going to head up towards the 30 area. But you can see how quick and how fast the VIX just turns around on a dime. It's almost instantaneous in some points where you can have high volatility, high market uncertainty, and then boom, before you know it's back down below 20. Everything is calm, cool, collect. I think for option traders that you guys are mostly option traders, most people who read this blog, you have to understand is that when the VIX actually spikes higher, that's not a time to get away from trading. That's actually time to kind of ramp up your trading because you can get high premiums for option selling, high premiums for credit spreads. Really, really good time to to enter a lot of positions in the market. Once the VIX comes back down here, you got to get a little bit closer because you don't have that volatility premium to sell anymore. And actually, I'll just kind of point out one or two trades here that everyone can kind of just take a look at. These trades have already kind of made money, so there's no point in doing this right now. But for our naked puts and calls strategy, and this is just to kind of look inside, we had an opportunity last week when the market had high VIX to sell a put way down here below the market on this particular stock. So after it was all said and done, and this week the market rallied higher, the VIX dropped, you can see that you can now only sell a put a little bit below the market. So you can see how much further you can get from the market, how much risk you can take away from yourself by selling options when the VIX is really high. So that's a really good strategy. The last thing I want to take a look at here tonight is USO. USO is a really good looking chart recently. You can see that, and I don't know if we posted this on the blog or maybe we went through it on a video, but once USO was breaking out here, we thought that it was going to bounce back off of this strong support resistance zone that we have here in green, and that's exactly what it did. So it broke out. Again, you can see the same type of thing happening here as with everything else. When it breaks out of trend lines and support resistance, is a breakout and a retracement of that area. Just, again, retesting that zone and bouncing off of it and kind of hammering out a base here, just to make sure that this area is strong to move off of in the future. So you can see that it bounced off of this area again. Now it's moving higher. The only problem is with USO and with oil in general is that now it's coming back into this area of resistance that we have up here. So really we need to see something major happen either in Libya or any other Middle East country that's going to affect the demand of oil to really, or the supply of oil to shoot up oil beyond this area. So I'm not predicting, or I never predict, but I don't think that the oil market's gonna shoot up anymore unless we get some news that we all don't know about. I think that things are more likely to kind of settle back down a little bit. So I think that oil next week will definitely kind of retrace and settle back down a little bit lower. Obviously, if that happens, that's going to be great for the equity markets, which is going to send stocks a little bit higher as well. Okay, as always, if you guys have any questions or comments, please email us, and happy trading.